Hello again. It's a real central bank fest this week with the Bank of Japan, the SNB and the Fed all making important announcements. I've been analysing these market shaking events with Simon Smith from FxPro. Okay, Simon, lots of central bank action this week. Let's start with the Bank of Japan. Obviously, they haven't moved on any of their policies. It strikes me they're in a bit of an impossible situation at the moment. Obviously, they can control their central bank policies, but at the same time, they've got stuff totally out of their control. They've got the tax hikes. They've got exports, which are better for the Japanese exporters, but more expensive for the domestic consumer. The wage hikes by the big industry isn't that great. What can the Bank of Japan actually do to try and stimulate price growth?
Well, as you know, they're pretty much through the kitchen sink at it when they started this latest round of QEs back in 2013. So they went large, and they've built on that. They wanted to double the size of the monetary base. They're still pushing through on that. So I'm not sure there is much more they can do. Naturally, as we've seen with QE through the Bank of Japan and others, the effectiveness of it diminishes the more you do, and you certainly still saw that with the Fed as well. So, but also the onus is naturally still lying very much with the government for them to push through on what they've promised to do, which has sort of been the weak point. So we are seeing some points of hope. We have seen some wage increases in some sectors, but I don't think we're seeing the sort of dynamism that perhaps they'd be satisfied with.
There's still an idea that the Bank of Japan might introduce more stimulus before the end of the year. Do you think that's likely?
Personally, I don't think it's likely. Again, I just think the effectiveness of it is going to be weak. The problems it's going to cause can often outweigh what it resolves. So I think it was more likely the onus is going to be again on the government to push through some of the structural reforms that they've been promising and again fallen short on. So I think that's the more likely route through we'd go through. And of course, we have to see what happens with the yen. If we do see further, up moves on dollar yen, sort of 125, 130 level, and that will also, to a lesser degree than in recent history, but also help their cause as well.
Right, let's rattle through these. Swiss National Bank also meeting this week. There's different ideas about what's on the table and what's off the table for the SNB, but there seems to be an idea that a cap's still a possibility, that they could increase negative rates, or they could just do nothing.
I think nothing's a more likely path. I'm not really thinking they'll want to put a cap on the Swiss franc at this point in time. The market's doing the work for them. The Swiss franc has depreciated significantly since they made that move. So I think whilst the market is doing their work for them, I think they'd rather just sit back. Naturally, the removal of the cap was a very controversial move. I don't think they want to sort of create a rod for their own back by introducing some other sort of cap. So the interesting thing is that, there's been some talk they might have some sort of pseudo target for the exchange rate. So I think the real focus is, now things have calmed down, is anything that they say on the exchange rate, but also what impact it has on their forecasts for the economy going forward. I think those are the main points of focus for this week.
But to the decision-making process at the SNB, what doesn't history tell us that anything is possible at any time with no signals? If we look at the way that floor was scrapped, you just never know with the SNB, right?
Things are different. I think we got lulled into a false sense of security, thinking that central banks are going to hold our hands through these things. As has happened with QE and forward guidance, we've been lulled into a false sense of security that they're going to let us know and pre-announce things, which you can't do with an exchange rate cap, unfortunately. That's not the way it goes. People criticise them for even saying 2 or 3 days before that it's a linchpin of their sort of policy. But what else can they say? If there's any wavering, then that the market would then round on it and put irreversible pressure upon them. So I don't think they had any choice in terms of the way they executed. Around the peripheries they could have done stuff better, but that's the dynamics of an exchange rate or a fixed or an exchange rate regime. You cannot show any wavering until you waver, basically. Yeah,
the Fed is the big meeting of the week. Lots of positive news, especially in terms of the unemployment rate. Do you see any weak points? Because there's so much focus on the plus points, but there are concerns about productivity, at least in the US economy.
Yeah, I mean, if you look at the data so far this year, most of it has actually fallen short of expectations. The labour market is a real standout, and you say the unemployment rate. Productivity is still a weak point. Inflation expectations, if you look at some of the producer prices, they've come in below expectations, naturally because of the stronger dollar. Inflation expectations on their preferred measure are still at the low point at which I don't think all the Fed members will be comfortable moving towards tightening policy until they're convinced that those have recovered to a significant degree. But I think what we will get this week is volatility, because I think all the outcomes, I don't see a sort of neutral market outcome given the potential that we see this week in terms of removal of words, etc.
Yeah, in terms of the press conference that follows, if this was an ECB press conference, there'll be lots of talk about the strength of the currency. Do you think it's beneath Janet Yellen to raise concerns about the strength of the US dollar?
The US dollar policy rests with the US Treasury. So if that contrasts with what we see in Europe and sort of euro being part of the ECB policy. So the ECB can and does comment on the euro in a much more sort of pointed way. The Fed it's very clear in the US. Dollar policy lies with the Treasury. So I think the interesting thing will be looking at the minutes or subsequently. So you saw in January there were some observations on the strength of the dollar, but then they're not going to come out. She's not going to come out and say, I think the dollar is overvalued, or I'm worried about the pace of appreciation. That would cause serious political ructions on Capitol Hill. That's not their mandate. What is worth looking at and see, if their forecast staff projections are impacted by the strength of the currency. We've seen it from some exporters and some companies saying it's starting to be a problem. So that's a point where we look for it. I'd be very, very surprised if Yellen did start, being more pointed in terms of remarks.
So just to finish off, what's your call on when we see this rate hike from the Fed? It seems the herd is moving towards June. Do you think it'll be that soon?
I don't think it will. I think the dollar strength is likely to be a factor that holds them back. As I said, yes, the labour market has done well, but I think the data out there I don't think is yet sufficient. You just have to look at ECB 2011, Bank of Japan a couple of times, central banks, Fed back in sort of the mid to late 30s when all these central banks sort of moved away from a zero or near zero policy and then have had to reverse. You need to be pretty sure, and some Fed members think you're better off seeing the whites of the eyes of inflation before you move, because then you can be sure that move won't be reversed.
Well, thanks to Simon for his take on events. Stay tuned. Dukas Copy TV for more interviews and analysis. But for now, goodbye.